Hello and welcome to Property, Plant, and Equipment, Part 3, Units of Production Depreciation. My disclaimer and copyright notice: the information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2020 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. So what we're going to be talking about today is the units of production's method for depreciation. And with the units of production depreciation, we're basically assuming that the property, plant, and equipment should be depreciated not based on time. Both straight line depreciation as well as double declining balance depreciation both use time in terms of their formulas. With units of production, what we're going to be doing is we're going to be coming up with a rate per unit to depreciate, and we're going to be using the following formula. We're going to take the acquisition cost minus the salvage value. This looks a lot like straight line because it is the same numerator as straight line depreciation. We're going to divide this by the total estimated number of units to be produced, and this will be giving us our depreciation expense per unit. What we will then do is we're going to take that rate per unit and we're going to multiply it by the number of units produced. That will be giving us our depreciation expense for the particular period of time. Notice though, because we're making this, and this is probably the most important part to remember about units of production, is that unlike straight line or double declining balance, when we multiply it by a fraction, so if I bought a piece of equipment on June 1st and I'm trying to depreciate it through December 31st, under straight line or double declining balance, what I would be going through and doing is multiplying it through by if it was June 1st, it would be by 7/12. Here, under units of production, we do not multiply it by that. It's simply, if we make no units, we take no depreciation. If we make 1,000 units, we take depreciation on 1,000 of those units. So no partial periods. The other thing that you have to watch out for is that you cannot depreciate beyond salvage value. And this is true in all of our methods. But right over here, as we'll see in the next example, we have to be extra careful about this because I like to try to make my students over-depreciate an asset. So hopefully you won't make that same mistake. So let's take a look here at our favorite example. Sahar's mom's class call purchased equipment on April 1st, 2018 for $400,000. The equipment cost $80,000 to install, and shipping the equipment to the facility was $20,000. The equipment is expected to last for 5 years, has a salvage value of $200,000, and is expected to produce 20,000 units during the equipment's lifetime. So here it tells us over this 5-year period how many units we actually went through and produced. So what's really important to keep in mind again, my depreciation equation is only going to be accounting for 20,000 units. So as we look at this part of it here a little bit later, we want to be a little bit more careful. So now let's go through over here and go to our computation. So over here, the first thing we're going to have to go through and do is we're going to come up with what is the formula that we're going to be using to come up with my rate per unit for units of production. So this is going to be my acquisition cost, or $500,000. And if you don't know where this is coming from, please look at the prior videos, but it's the purchase price of $400, the installation cost of $80, and then the shipping cost of $20. It's those acquisition costs or those costs that we incur in order to get the equipment up and ready for its use. So I'm going to take my acquisition cost minus my salvage value of $200,000, and I'm going to divide this by 20,000, which are my total estimated units to be produced. Okay, so right over here, once I go through and do this part over here, I'm going to get a total of 300,000 divided by 20,000. So my depreciation rate on a per unit basis is going to be $15. So here, whenever I produce something using this machine, I'm going to be going through and using a rate of $15 per unit. So what this question is asking us to do is to determine the amount of depreciation expense for every one of the years. Let's do 2018 first. So for 2018, I produced 1,000 units at $15 per unit. So my total here is going to be 1,000 times $15 per unit, or 15,000. What is really important here is that if I was doing this using straight line or double declining balance, I would need to multiply this result by 9/12. And the reason is because those are methods where it's a function of time. I do not do that here, right? So what I'm doing right over here is that I went through and basically produced 1,000 units, multiply it by my rate per unit of $15, and that's going to give me $15,000. So as we go through and do this, let's also kind of put a column in here as my total cumulative units produced as of the end of 2018 is 1,000. Let's take a look at 2019. So over here for 2019, it's 5,000 units times $15 per unit. And over here, when I take 5,000 times 15, I'm going to come up with a total amount of depreciation of 15,000. Okay. Now, in terms of the total number of units produced, the cumulative numbers of units produced, it's going to be 5,000 plus the 1,000 from the prior year, or 6,000. Why this becomes so important is I cannot take depreciation beyond 20,000 units, because that is the number in my denominator. So we're okay though for right now. Let's go to 2020. So in 2020, we produced 10,000 units at 15 per unit. So this is going to give me a total of 10,000 times $15 per unit. So this is my total depreciation expense for the year ended December 31st, 2020. When I come over here, the total number of units that I have produced to date will be the prior cumulative amount plus the current, or 1,000, which was in year 1, 5,000, which was in year 2, 10,000, which was in year 3. So the total number of units I've produced at the end of the year are 16,000 units. At the same time, what does my accumulated depreciation balance look like right now? If I was just to take a look here at my accumulated depreciation balance, over here, it had a beginning balance on 1/1/18 of 0. I depreciated the equipment by a total of, in 2018, I depreciated the equipment by a total of 15,000. So my ending balance as of December 31st, 2018 would be a total of $15,000. Remember that accumulated depreciation is a contra asset account, right? It's not going to get closed out to retained earnings. Our depreciation expense is a temporary account. It tells us what we use during the period, and that will get closed out to retained earnings. So when I look at accumulated depreciation for the following year, my opening balance on January 1st, 2019 is going to be 15,000. And then in 2019, I took a total of $75,000 of depreciation expense. So my 12/31/19 balance is over here at $90,000. And then just for fun, let's go ahead and take a look at 2020 in terms of what our balance here looks like. So here on 1/1/20, my opening balance was 90,000. My 2020 depreciation over here was 150,000. So my ending balance right now as of 12/31/20 is 240,000. So what if I just did this? If on 2021, I took 11,000 units times $15 per unit, I would get 11,000 times 15, or I would get 165,000 in total depreciation expense. So if I went over here and I basically went through and recorded this in 2021, if I did this 165 here, I would end up with a total accumulated depreciation balance of 405. Now, if I looked at my net book value as of December 31st, 2021, and my net book value is my property, plant, and equipment, which is 500,000, which is my acquisition cost, less my accumulated depreciation here at 405, I would get PP&E net of the depreciation of 95,000. My problem is what? I can never depreciate below salvage value. My salvage value here is $200,000. Therefore, I cannot take this amount here of basically of depreciation. I can't do it. If I take this amount of depreciation, I'm going to basically come over here and make a huge mistake. I'm going to over depreciate the asset. Remember, I can never depreciate beyond salvage value, right? My salvage value for this question is still at 200,000. So what do I need to do? Well, over here, my total cumulative units and rate, and this is really in our denominator. So the most I can take in 2021 is going to be over here. And let's just add in this one little column. We'll call this units depreciated. And so here it was 1,000, here it was 5, here it was 10. In 2021, I'm only going to do 4,000 units because at that point in time, my cumulative number of units produced is now going to be at 20,000, which is the maximum I can go through and take. So for 2021, this is going to be 4,000 units at $15 per unit, or for a total of over here of $60,000. So let's take a look and do this the proper way. So if I go down over here, and I'll just move these down a little bit here. So if I go through here and now take a look at my opening balance on 1/1/21, remember my opening balance is the ending from the previous period. If I just take 60,000 worth of depreciation in 2021, my net book value or my accumulated depreciation is now 300,000. So when I look at this from a perspective of, what does my balance sheet look like now correctly? Over here, this is going to be 500,000 less my accumulated depreciation of 300,000 gives me property, plant, and equipment net. So that's what I have to do if I'm given a situation like that where I'm producing more than the actual units that I was expecting to when I originally acquired this equipment. So this balance over here now asks us for how much do we actually go through over here and take depreciation on in 2022? And the answer to this is going to be 0. Because once I've reached the threshold, which is the total number of units expected to be produced, I don't take any more depreciation. Okay, so that's really the key thing here in terms of units of production. So again, we do not account for any types of partial periods. We go through and we depreciate whatever we produce, we depreciate. I cannot depreciate beyond salvage value. This is true under all of the different methods. And so over here is our results. And again, If you kind of go through and think about it, that's why we had to go through here and stop, because if I did go through and if I was right, kept on depreciating, what would happen is that my net book value, which is my property, plant, and equipment minus my accumulated depreciation, would fall below the salvage value of $200,000. So I want to thank you today for watching this video. Please do not forget to like and subscribe. If you have any questions, please feel free to email me at 1812cpa@gmail.com. Have a great day.